find out that, okay, these two people have some kind of problem. So he can convert that problem into opportunity, give them some monetary benefit, give them some opportunity, give them some, or give them some hopes of promotion or something. They will perform best. Effective communications. Communication is very important. You have to do under this budget. So now you have flexibility. Either you can, complete this project into lower than this budget or at the top of the budget. That's it. If you go up, then your performance will be devalued. Right? So these are all the basically functions of a manager. Now controlling. Here comes managerial accountant. Controlling, because we are cost effective. The other name of managerial accounting is cost accounting. Because here we are watching where the money goes under the limits or not, whether someone is violating or not. Because you plan, you allocate the budget, and you are responsible to see whether the plan is going on track or not, in terms of cost, in terms of numbers, in terms of production, in terms of targets, whatsoever. So the control function ensures that plans are being followed or on the target or not. Right? So general manager, he will resolve the conflicts and all the stuff so that people just produce more, be more of, of productive nature. But when it comes to money, if you follow or if you fulfill the project in least amount, even then this is a risk. Means you didn't plan well. Your planning function is so poor. You told us that this project needs $100,000 and you completed in just $10,000. It means you wasted our 90,000 worth of energy. We could be utilizing those 90,000 in somewhere else. And you were thinking, employee was thinking like, I did a best job because I saved company 90,000. No, this is a huge risk. Your planning is so poor. So sometimes people think that we are doing very good by saving a huge amount of money, and we are saving it with the public. We're saving it for the company, but actually this is not good because it shows that there is a poor budgeting and forecasting or planning section over there. Right? Okay, let's move forward. So feedback in form of performance reports that compare actual results with the budgeted are essential part of control functions. Like I said, if you complete the project within the budget, it's good. At the budget, more good. But extremely below the budget, that is risky. Nobody is going to encourage on you. Nobody is going to encourage that because it shows that there is poor planning and forecasting. That's why you increase the budget, and when you go to the market and you find out that it's going to be done in least amount, it means you allocated a huge amount of money which could be used in somewhere else to increase the profitability, and you miss that chance. So any question? Ali, Coco, Subhan?
No, so far it's clear.
Good. Now, planning and control cycle. So first of all, when planning, you formulate long-term and short-term plannings. Long-term planning are strategies, right? You make strategies and you make plans on year-on-year basis, right? The planning begins, right? What happened? And then you start implementing the plan. When you implement the plan, it means you are basically carrying forward the plan. How this plan is going to be carried forward, how many staff you need, how many workers you need, how many lower workers you need, right? Conflict resolution and all those stuff, right? Motivation stuff. And then here, measuring performance. You measure the performance from time to time, and then you compare it with the actual one. And you say that according to us, right now 50% work should be done. But when you measure the performance and you say that only 40% work is done with this time period, it means you are 10% behind. So what is the reason? Or you did you plan that okay 60% is going to be completed and you completed 65%, good. But if you completed 80%, that's not good. It means you pressurize your workers too much, or maybe the planning was so poor, that's why you allocated more time, right? So in between formulating, implementing, and measuring, there is a decision making, which is very important stuff for every manager. Planning is a good role. Yeah, we accept that. If planning is good, implementation is good. Implementation is good, then the performance is good. But all these action requires formulating strategy, need decision making. Implementing the strategy, need decision making. Measuring performance and comparing performance needs decision making. So in every stage, every function of management, decision making provides a key role. So that's why if you are called for a job in a good company, the HR always talks about different scenarios and want to see your foremost quality, and that is decision making. You don't want to see you're handsome, you have a professional dress code, right? Or you can speak well, you can communicate well. No, that is already done in prejudging and all the stuff. They want to see you that in this scenario, if he can pick the decision makings on every step and he's comfortable, he have a good reasonable judgment behind their decision making, believe me, you get hired. Nobody cares about that, whether you pass from Harvard or pass from Donghua or pass from Oxford or something, because that's what a company wants. You must know that whether on which stage you are and how many decisions you need to take on every step. If you have this ability, game is on, buddy. It's like that, okay? So develop decision-making habits in yourself, but that doesn't mean that you make poor decisions. Decisions should be made on reasonable judgments. You must know the nitty-gritties of every stage as well. Okay, now identify the major differences and similarities between financial and managerial accounting. Here we go. So we have shared enough light on the business environment and managerial accounting. And now let's talk about the comparison. Number one, users. Like I explained earlier, financial accounting users are external, governments, investors, creditors, and regulatory authorities, right? Managerial accounting users are managers, right? Purely managers. Why? Because they need to perform planning and controlling function in an organization. And why they plan and what they plan under planning, how to achieve those strategies on year-on-year basis, right? So it doesn't mean that you escalate your budgets. So that's why controlling function is there. So sometimes organizations are valued on the basis of planning, that they are making the same project, the same product, but their planning is so good. It means the company, everybody else is producing the same stuff, but when they produce with the planning and their cost is smaller. So that's why this company is surviving in the market. If the price goes down, others exit the market and they are still in the market because the planning is very good.